One stock just cracked today's top 5 for July 15th. IBM. IBM just got hit with a sledgehammer, down 25% on preliminary Q2 results. For most retail investors, that's panic sell territory. But here's what makes this worth watching. Massive volume, a clear support level, and options positioning that's not screaming fear. This isn't a buy this dip immediately situation. Conviction is LOW, but it's worth your radar as a potential stabilization play or bounce candidate. We're going to walk through the technical picture, the options setup, and exactly where you'd want to be watching this stock over the next 2 weeks. IBM was trading around $300 before the earnings miss, now at $217.07, and $85 drop in one session. The volume is 7.32 times normal, which confirms this is genuine capitulation, not a rumor. Both moving averages tell the story. The 50-day average at $262 and the 200-day average at $272 are well above current price, meaning the stock was already weakening. What we're seeing is acceleration of existing downtrend. Support is sitting at $213.22, right where we are now. If this level holds, you could see a rebound. If it breaks, the next target is $188.25. The resistance ceiling for any recovery is $311.80, which would require filling the earnings gap. That's your chart roadmap. RSI is at 30.35. That's neutral territory, just above the oversold threshold of 30. In real terms, this stock has been sold hard, but not yet to the point where automatic bounce hunting usually kicks in. Normally RSI below 30 signals exhausted selling and a potential rebound. We're on the doorstep of that signal. The put-to-call ratio is 0.821. That means for every dollar bet on IBM falling, there are about $1.22 bet on it rising. That's mildly bullish options positioning and suggests smart money is not in full panic. If that ratio was 2.0 or higher, you'd have extreme fear. At 0.821, it's neutral to slightly constructive. Combine the near oversold RSI with the support zone test happening right now, and you've got a technical setup worth monitoring. The immediate catalyst, Q2 earnings miss with guidance cut, is done. The 20% dump already happened. What matters now is follow-up risk and recovery setup. First, the earnings call itself. When a stock gaps this hard on prelims, the question is whether the full call confirms panic or allows for a reset. Second, sector momentum. If tech earnings keep disappointing and the market loses confidence in IT infrastructure plays, IBM could break support regardless. Third opportunity. If it stabilizes here and the broader market holds, IBM could bounce 10-15% on relief alone. That's show me territory, which is why conviction is LOW. The next 2 weeks will be controlled by company communication, sector rotation in IT infrastructure, and whether the $213 support actually holds. None of that is in your control as an investor. Implied volatility is at 0.6548. Options are moderately priced, not showing panic levels. For context, true panic would show much higher Roman 4. What you're reading is this is a normal earnings shock, not a systemic meltdown. That's useful, because it means call options on IBM are reasonably priced for a potential $213 to $250 recovery. If you were building a bounce position, buying a $220 call with 2-3 weeks to expiration would cost you normal money, not panic money. The put-to-call ratio of 0.821 reinforces this. More traders betting up than down, which aligns with the watch-up verdict. But, and this is critical, this is not a home run options setup. It's a cautious, conviction-light opportunity that only works if support holds, you enter at $213, $217, and you respect the $188 stop. No heroics. The verdict is watch up with LOW conviction. Translation. The technical setup suggests stabilization or a modest recovery is the most likely path, but don't bet your portfolio on it. Conviction is LOW because the earnings miss is real. Sector headwinds are real. And IBM's forward guidance just got cut. However, support is holding, options aren't panicked, and the risk-reward at $213, $217 is defined. Here's your playbook. If you don't own IBM, this is watchlist territory, not buy now territory. Set alerts at $213.22 support break equals walk away, and $220 recovery confirmation equals consider entry. Entry zone is $213, $217 with your stop loss at $188.25. Target T1 is $250 relief bounce. T2 is $272.36 MA200 reclaim. T3 is $294 intermediate recovery. If you already own it, hold for now and monitor guidance updates. Don't panic sell, but also don't add here. IBM is a show me setup right now. The chart is telling you a bounce is possible, the options market is saying volatility is normal, and support is holding its ground. But the earnings miss is real, and sector headwinds are real. This is not a FOMO on down 25% moment. It's a wait for stabilization confirmation. Then make a calculated small entry moment. If support holds and the broader market stays constructive, IBM could bounce back to $250 within 30 days. That's plus 15% from here. But if support breaks, you could see another $25-30 downside to $188. Risk is defined. Conviction is low, and that's exactly the setup worth watching but not chasing. Keep this on your radar. Set price alerts at $213 support break and $220 recovery confirmation. The next 10-14 trading days will tell you everything. And as always, this is technical analysis and market context, not financial advice. Do your own due diligence before risking capital.